the system is called the system for a reason, right? I mean, it's been around a long time, and there are certainly a small number of people that control most things. The central bank controls everything. Well, how do they do that? Well, they do it by controlling the value of the currency, and again, siphoning the money to the top of the pyramid. I always use the little all-seeing eye, which is on the back of the dollar, which is kind of weird. And why would that be? Well, if you think about it, that's what inflation is. If you can print money out of thin air, so if I have $1 trillion over here, and I can suddenly print another $1 trillion, well, what just happened to the value of my money? Just went down.
Yeah.
And I'll give you the real numbers. 1776 to 2020, there were $10 trillion created in the United States. Then from 2020 to 2022, another $10 trillion. We printed half of all the money that's ever existed in the history of the Republic in 2 years after the lockdowns. What the hell is that? What's called modern monetary theory, modern monetary madness. But what happened? The value of the money went down by half. Now, here's the cool part. How do you protect yourself? We can own gold. So gold prices have basically doubled since then, which is what they should have done. But better, you can own Bitcoin. Well, why does Bitcoin matter?
With the continuous expansion of the US money supply and that of other countries worldwide, investors face a critical and highly concerning moment in history. The continuous printing of money has raised substantial concern regarding the devaluation of fiat currencies. In his latest interview with Ben Kelly, Mark Yusko, Morgan Creek Capital Management CEO, has spoken up regarding this problem. He explains how central banks control the economy by managing the value of currency, which has been causing inflation. He criticizes this approach, referring to it as modern monetary madness. To solve this problem, he then suggests investing in assets like gold and Bitcoin as a way to protect against currency devaluation. He notes Bitcoin's advantages over gold, such as security, scarcity, divisibility, and its consistent value compared to fiat currency. Bitcoin itself has never been hacked or had a fraudulent transaction in its 15-year existence. The Bitcoin blockchain is highly secure due to its decentralized nature, and Bitcoin's blockchain represents the most powerful supercomputer in the world. Yusko believes that Bitcoin is the one asset that the government cannot seize or control, which is why he predicts that the future of finance will be decentralized and built on blockchain technology. Let us now view clips of Mark Yusko as he explains the current economic crisis and why he believes Bitcoin could be the ultimate and, surprisingly, planned solution to solve that problem. Give this video a like to show your support and subscribe to the channel to always be updated with the latest crypto news. Thanks and enjoy.
So when I got introduced to Bitcoin, I did what everybody does. I did a little research, and you hear about this person, guy, self-identified once as a guy, Satoshi Nakamoto. And so I typed in Satoshi Nakamoto into Google, and what comes back is Intelligence Central. The word Satoshi means intelligence, and Nakamoto is the surname of families from the central provinces in Japan. Sounds really close to CIA. So, okay, what if the NSA, CIA, somebody did create this? And if you go back 2 years, 2007, there was a paper sponsored by the NSA written by Nakoshi Sakamoto. I'm pronouncing that wrong, but it's basically just a homonym. And it's a real person. He was the head of cryptography for NTT in Japan. And it basically talked about a peer-to-peer system. I'm like, okay, that's weird. What if the NSA did create this, and it was designed because they knew that the dollar was dead? If the government figured out that their only way out is through devaluation of the currency, so they're going to destroy the dollar the same way every other republic has destroyed their currency in the history of time when they get too far in debt. And you look at the history of empires, they all fail for the same reason. They get overly indebted and their currency crashes. And so if that's the case, they get everyone to exchange fiat for this Bitcoin thing, and then they steal it all out a back door. Like, what if that's true? Okay, so we're really lucky. So at Morgan Creek Digital, one of our venture partners is this guy named Scott Stornetta. And Scott Stornetta actually coined the term blockchain with his partner Stuart Haber in 1991. Wow. He knows a lot about the technology. And so I asked him, I said, I've thought about this. And he said, well, I've never really thought about that. That's an interesting concept. No. It's like that fast, Ben. He said, no, the government can't seize Bitcoin. It's decentralized, right? They would have to hack 51% of the computer simultaneously. Even the government can't do it. Can they make it illegal? Can they do an Executive Order 6102 like 1933? This is funny too. On 4/5/33, Executive Order 6102, they basically made gold illegal. If you type Satoshi Nakamoto's birthday, it's 4/5/75. 4/5, nod to Executive Order 6102. 75, when that was reversed and made gold legal again.
Wow.
It's kind of wild. And so if Satoshi were, right, government agency, they can't steal it all. Okay, so then why would they do it? Well, they could be doing it because they know the dollar is doomed and this would be a better system, and they could create hegemony by having that big wallet, and then they could move that once it becomes worth, many, many, many billions. Can they make it illegal? Well, they can try, but the problem is they can't seize it from you. I mean, literally, right? Because they could, if you hold it at Coinbase or some centralized place like Mt. Gox, okay, they could seize that. There are some laws around that. I mean, if they went to your brokerage account and seized your assets, I mean, they have to have some reason for that. But government's good at making up reasons. I mean, they seized the Russian assets with no cause. But okay, but what about if you hold it yourself in cold storage on a ledger drive? Well, then come to your house and say, "Give me your seed phrase." Nope, I forgot it. You can point a gun at your head or your kid's head. Now, is the government going to come to your house with a gun and threaten your family? I don't think so. But look, in a Mad Max world, anything's possible. Yeah. So from that perspective, it's very safe and secure because it's so decentralized.
Questions surrounding Bitcoin's mysterious creator, Satoshi Nakamoto, have remained unanswered, fueling various speculations about the origins and purpose of the crypto asset. Mark Yusko has raised intriguing questions about the potential involvement of government agencies in Bitcoin's creation. Yusko's theory revolves around the interpretation of Nakamoto's name and the possibility that it could be linked to the intelligence agency, CIA. Yusko notes that Satoshi means intelligence in Japanese, while Nakamoto is a common Japanese surname. He suggests that the combination of these words could be interpreted as Intelligence Central, which bears resemblance to the CIA. Additionally, Yusko references a paper from 2007 sponsored by the NSA and authored by someone with a name similar to Nakamoto, which discussed a peer-to-peer system. Yusko acknowledges the possibility that governments may attempt to seize Bitcoin assets from individuals, especially if Bitcoin adoption threatens the stability of fiat currencies. However, he argues that the decentralized nature of Bitcoin makes it inherently resistant to government confiscation. While governments can enact regulations and make Bitcoin transactions illegal, Yusko contends that they cannot seize Bitcoin assets held securely by individuals, especially those stored in cold storage. What do you think about Mark Yusko's theory? Let us know in the comments. Now here are more insights from Mark Yusko.
So, I live here in Chapel Hill. According to Zillow, my house went up 50%. But my house didn't grow. My house didn't get more efficient. It actually wore out a little bit, and I put money into it. But what actually happened? The money got worse. And so, went to lunch 4 years ago, and I paid $10 for my 8 chicken wings. Yesterday, $20. The money got worse. Now, here's the cool part. How do you protect yourself? We can own gold. So gold prices have basically doubled since then, which is what they should have done. But better, you can own Bitcoin. Well, why does Bitcoin matter? Well, Bitcoin is more scarce than gold. It's more divisible than gold. It's more portable than gold. So it has all the benefits of gold, but it's an electronic form of it, a digital form of it. And the best part is, if I think about owning Bitcoin over that same period, it never changes. There's 1 Bitcoin equals 1 Bitcoin. But I don't price Bitcoin in Bitcoin. I price Bitcoin in dollars. So my dollar price has gone from 15,000 to 60,000. That's better. But again, that's not because the Bitcoin got better. It's because the money got worse. Think about places like Venezuela, where you're pricing Bitcoin not in dollars, but in bolivars. There's never been a bear market because the bolivar has gone down 99.999%. Or think about Argentina or Turkey, where the lira has gone down 99%, or Egypt. If you owned Bitcoin, even for a small portion of your wealth, you didn't lose it all. I have 3 grandkids, and my youngest is 1. She will never have one of these. She will never have a leather wallet, ever. She will never use paper money. She will not know what paper money is. And that's pretty amazing. And that digital transition is all going to be based around blockchains. And once you see that blockchains are the operating system for this new digital era, you can't unsee it. And you can't not help be excited, and you can't help but want to own these digital assets. Now, you don't want to own them all, right? And there are meme coins, and look, I don't get meme coins in the sense that they don't have value, except they have value as a community. These are people in a community. And yes, they're basically creating a Ponzi. I mean, it is a Ponzi, and they all look the same with the Eiffel Tower pattern. And if you're first in and first out, awesome. If you're last in and last out, very bad. But they're a part of digital community. But that's a very tiny percentage of what we're talking about. Most of what we're talking about are true stores of value like Bitcoin, true global computing systems like Ethereum and Solana, and others that are vying for it. And at the end of the day, we will have a system of blockchains and tokens that facilitate commerce on blockchains that is very robust and very global and will last for thousands of years.
Do you agree with Mark Yusko's insights? Feel free to share your opinions in the comments below and continue the discussion. Don't forget to give us a thumbs up and subscribe to our channel for more insightful discussions on cryptocurrency and finance. Your engagement helps us continue providing valuable content to our audience. Thank you for watching. Stay tuned for more videos as we go over the latest news in crypto finance, technology, and everything in between. Until next time, happy investing.